Hi there, Serial Trader here. Alright, so let's have a look at weed. So, big day today. We took out that key support level of 37.20, and then we took out that critical support level of 36.17. But as far as trade management, a bit of a predicament. So, clearly, we now actually have a series of lower lows, lower highs, and now an actual lower low. Okay, so we broke the higher low pattern that we've been up, you know, for quite some time here, coming out of that wave 4 triangle. So that's significant. That's a potential trend changing event, at least for a certain period of time. And it's significant because it's on the daily chart, right? But as far as trade management, bit of a predicament, right? Because if you go to the hourly chart here, the hourly RSI on today's dumping, and even as it was just getting close to taking out this support, and then even during and after this support, hourly RSI was getting below 30, and then it got deeply below 30 as it had that spike down. So we were in the mid to low 20s on RSI on the hourly, which has historically produced pretty good bounces. So even though analytically things have turned more bearish on this chart, from a trade management perspective, you don't want to just take a bad fill and get out of the position when you basically know that some sort of bounce is coming. And you also have the potential that you just have this initial move down, this sideways, recovery, and then one final leg down to just make a marginal new low, and then maybe that's just a three-wave decline, and we're going to go back up. You don't know that for sure, right? It's possible. So that's why you want to let this bounce play out before turning too bearish. So yeah, it's a bit of a difficult thing to manage. What I've done essentially is I've left long stock in place. I didn't want to have a bad exit knowing that we were so oversold short term despite breaking these critical levels. And then that bounce definitely started playing out towards the end of the day. And nothing to say it's finished yet either. And nothing to say it's not going to develop into something more than a bounce. But that being said, I have to respect that we have broken what was currently being worked as the interpretation. So I've added some long puts to the long stock, fairly short term, so they'll be quite responsive, and they weren't overly expensive. So if we just really have some sort of capitulation over the next few days, the puts expire this coming Friday, so very short term, they'll do well, and they'll stop the bleeding of the stock and actually start making some money on top of it. And then if it gets ridiculously oversold during that time period, obviously you just close the puts and hang on for another at least a bounce in the stock. But if not, the puts weren't overly expensive as a member of the total position between the stock and the options. And if the stock really has bottomed, which I'm seriously doubting here, but if it has, and we just start going nuts again to the upside, well, the stock will easily outperform the fairly minor losses of the long option puts there. Okay. So yeah, it'll be interesting to see how this plays out over the course of the week. It's just Monday now, so 4 more trading days. I'm definitely edging towards more downside though, but just not with enough confidence to go strongly bearish as far as positions go. And if we just want to go to the maybe we can do a 4-hour time frame for some labeling. I'll just clean all this up because this has all been void. Took a while, but it's been proven to be the incorrect interpretation. And this does happen. Okay, so I'm going to say, just looking here at a glance, fresh chart, we definitely have some sort of 5-wave structure in place to the upside, and now we're having potentially a larger corrective pullback. And as far as our progression within that pullback, we either have a 1 2 up, working a 3 down, you can have a 4 or 5, and this is the most bearish interpretation by a long shot. Okay, we're either working something like that, yeah, sure, that's fine for the degree. Now this to me is less likely, but keep it in mind. It's also less likely because this wave 2 was so shallow. Typical wave 2 retracement's usually quite deep. So this leads me more to believe that we're having some sort of a ABC down or a variation thereof. Now, I mean, we can. I kind of like the idea that we had some sort of A up, B down, C up for B, and then we're gonna have this C down. But as far as the subdivisions of B, I'll just show you what I'm getting at here. So maybe something like this, right? So we had an A up, 3 wave move down for B, and then we had what's called a truncated C wave. And okay, so normally, and this is what I was working before, you'd normally be working this C wave to make a new price extreme above A, and that's what I was kind of positioned for, with my trade there. And when we got our A up, we got a 3 wave decline, failed to make a new low, and then we were looking for that C up to make a new high above A, but it didn't. We had a C up, we had this move up, but it failed. So it was showing some underlying weakness. It didn't go to where the pattern would normally take it, okay? And truncations do happen, but they're usually significant in that they show underlying weakness or underlying strength, depending on the direction of the pattern and the truncation at hand, right? So this is something I'm kind of looking at here. And if I were just to draw a channel, which I certainly will, because big fan of channeling. Here's our corrected price channel that we're in from the top, by my definitions here. And let's get some Fibonacci targets to the downside. So we got a few relationships. We have the 618 between A and C, and then the equality relationship between A and C. So a couple downside targets, and then we could either find support on this middle line of the channel or come down and touch the lower line of the channel. And I'll also mention, I like this equality relationship, and I'll tell you why. So if I zoom out to the daily chart, let's get rid of these triangle trend lines, since we've gone over that before. If I go down this daily chart, so where this wave 4 ended here on this E wave, right around this 26, not 26 and change. The absolute low is, absolute low is 27. So right at 27 there. That's where I have the E wave ending for triangle wave 4. So once you have a 5-wave sequence in place, like we do up here, typically if you have a correction that leads to more gains, that correction often travels to the previous 4th wave extreme, okay? And often ending near its termination point. So in this case, the termination point was 27. And that lines up quite well with the equality relationship between this proposed A and C off of our B wave up here, okay? So that's something, if we fail to bounce here and just have further decline, which it's looking a little more likely that that's the case, that's a distinct possibility that we go all the way back down to this 27 area and complete this larger ABC, right? And just to show, maybe something like this, maybe hit the median line, because usually the C wave slope is shallower than the A wave slope, so that's also something else to look for. So that's kind of what I'm thinking right now with weed. And it's unfortunate sometimes the trades don't work out, but that's why you have to be ready to change your game plan, adapt to the market conditions. Simply in this game, you're going to be wrong, and it's just how you manage things when you're wrong that really defines how successful you're going to be or not. Anyone can, pick a good trade, but not everyone can be a good trader repeatedly, and this is really where it comes down to it, is how you take care of these situations where things just don't work out as you anticipated. So those are kind of my thoughts on weed here. And as far as CGC goes, we're in the exact same scenario, same implications. Everything's virtually identical other than the actual nominal price level, so I won't go into too much detail on that. And yeah, you can just on the daily candlestick chart for weed, we're staying below this T line, and the T line's pointing down. And if daily RSI were to get oversold, which really on weed, when is the last time daily RSI got oversold? So that's over here on this wave 2 correction, which was very lengthy and deep. So that happened quite some time ago. That was in summer of 2017. So an entire year ago, that's the last time we had daily oversold RSI. So even on the subsequent large moves down, we never actually got oversold on daily RSI. And actually, we're coming into a zone of RSI uptrend support, bull market support, that 40 zone, okay, between 40 and 50 or below 50, but right around 42. So if it does bounce here and we hold that 40 level and we get back above the T line, there's still some hope for a more near-term bullish scenario, but not holding my breath here. Just waiting to see what happens. And basically, right now I have the long stock, and I've got a stop. Let's go with this. I think a 5-minute price chart would probably do. Okay, so here's the low of the day. Okay, that was 35.47. So we've got a little higher low pattern in play. Maybe a little impulse Elliott move starting, although not looking particularly promising there. But this is the first higher low, so that's 35.83. So I have the stop on the long stock at 35.82, just below that level. So if this higher low pattern can continue and we can start an impulse wave, it won't get stopped out. But if it does, the long puts will really start kicking in as we go down, and then the stock will get taken off with a stop. And then the long puts can actually just start gaining without any losses on long stock at the same time, okay? So that's kind of my strategy there. And we'll check in throughout the week, I'm sure. All right, Serial Trader signing off.